to love the way I feel it. O que é esse amor?
Yeah, it's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. It is April 9th, 2018. And we are rocking out to some Brazilian rap. My man Fan Stanner wanted to hear some Smoke City. So we're rocking out to a couple tracks from Smoke City's album. I think it's the Flying Away album. So hope you guys enjoy this today. It is Monday. Let's get it started, people. Bitcoin's been smacked down. My algos were still short anyway, so that's good. We're still on the right side of the trade. Now I'm back up on those trades, so looking good right now, people. So today we're going to talk about ICOs. An interesting article that was sent by my boy Ed and Eddie. Shout out to you, Ed. Thanks for the article. Very interesting article and good article. Highlight some key points in the transition we may see in ICOs and how they're structured. The article is calling it ICO 2.0. So, you know, I thought this was a good article, and it really may be the direction we head in as regards to ICOs. Primarily, I'm talking about in the US and how the SEC is clamping down on things. So this is just some information that may be helpful to you guys as you go forward this year and beyond. But before we get into that, you know the routine. We got to check out the market cap. Currently at $257 billion. Bitcoin's dominance has dropped a little bit. It's at 44.4%. And a sea of red today. A sea of red. So let's take a look at the technicals. So as you can see here, we're still double short. And the other short, I think, is from up here. So we took a short off as we spiked, as I told you guys, but we placed one right back on shortly thereafter. So we should be in the green here. Let's take a look at the list of trades. Let's see here. Yeah, we've got two shorts open here. One at 67.85 and one that was put on at 68.36. Let's take a look at performance, and if we look at open trades, we will see here. Let me see where the open PL is. So open PL is currently 0.32%, and I changed the so now we're trading. If you look at this now, you'll see I'm trading on a $20,000 account versus $100,000. That's more realistic for many of you, and it may even be lower than that. All that would do is essentially, if you come down even to, let's say, 10,000, you know, and you're trading the same, basically the same lot size as the algorithm is trading, which is 1 Bitcoin. You know, that I wouldn't suggest trading trading 1 Bitcoin on a $10,000 account, because that's trading basically 6% of your equity per trade at these prices, right? But you would just double your profits and drawdown. So your drawdown would be like 64%, which is, like I said, is kind of high. I wouldn't do that. But on the flip side, your profits would be double, almost 400% at that point. But again, 20,000 trading 1 Bitcoin, 1 lot, or 1 contract. These are the current running results. Again, very good over a year and a quarter. So looking good here, people. We'll see how this latest trade pans out. I also have the Ethereum algo is all set and ready as well. So you guys will be able to start signing up this coming weekend. I'll have initially 50 slots only, and then every 3 quarters I will add another 50, and I have my target as far as how many I'll have in total for this particular trading system. I'll be developing more in the future where other, you'll be able to get into those once we, I go through the whole back testing and tweaking and just monitoring things. But 50 out the gate, and in another quarter I'll add another 50. The total won't be large at all. Won't be far from 150 to 200 the max. So that's just kind of giving you guys a heads up. So that's that for the algo. My manual TA, we're still in the trading range. Someone told me the other day, you don't know nothing about this trading. We ain't in no trading range. Yes, we are. And if I actually, I just kind of drew that kind of haphazardly, but honestly, we could do it something like this. I can draw it more accurately. So it's, it's like this, and I can't get over all the way over there, but you guys get the point. Just want to redraw that trading range. And like I told you guys, it depends. If we break out to the bottom of this trading range, meaning we get below 6,400, it's going to be a nice fall. And to the contrary, if we break above 7,500, it should be a nice pop as well. So let's just keep an eye on that. Of course, since we're toward the bottom of this trading channel, the likelihood of us testing that low is higher. So the article today is coming out of Hacker Noon. It says the ICO is dead. Long live the ICO 2.0. And so this article is very informative in my opinion, and should help give you possibly an understanding on the direction of ICOs, for at least for US citizens, that is. So it says here, the entire cryptocurrency industry is full of debates about regulation and which victims the SEC will go after next. However, these debates are misguided. In reality, debate ought to be focused on how to best use existing regulation to raise capital for a new blockchain company. The belief system of industry pundits is that regulation is unfair, unnecessary, and only applies to bad actors who are hurting the marketplace. It is time to make the transition and accept reality. Rules and regulations exist, and they apply to initial coin offerings. Again, shout out to my man Ed and Eddie for dropping this article. Now, before we even get into this, guys, I've had a stance that I've been taking probably ever since the whole news. Actually, I started talking about it prior to Centra and the SEC whole debacle that's going on right now. I told you that I felt like ICOs in the US, if you carried any ICOs in the US, ICO tokens, there were tail risks with doing that. With how ambiguous the SEC has been towards ICOs, you carry that tail risk of not knowing one day, like a Centra, they get shut down, or not shut down, but the founders, are jailed and indicted and all that stuff. So you see what happened to that token. By the way, yesterday I bought some more Centra at a penny and a half. Can you believe that? Centra was trading at $4 at one point. And so I bought some at a penny and a half yesterday. So we'll see how that pans out. Kind of just, throwing some at it to see if indeed Centra will continue to operate or not. So it's a gamble, but I thought I would do that. But yeah, so holding any ICO that was done in the US holds a certain level of tail risk in regards to SEC regulation. I don't care how great of a team you have that's kind of legal team that's covering that. I think if you do have a good legal team, that it may be you know, it may be better for you. You may be better positioned. But at the end of the day, you know, these types of things, these types of headlines in a thinly traded market can wreak havoc on your positions price wise. So that's just something that I kind of pointed out even prior to this Centra ICO issue with the SEC. So it kind of goes through, this article goes through Ethereum's ICO, goes through the DAO, how that whole thing went down, and then it goes through Tezos. That's supposedly the mystery token still that Cliff High talks about. And then Act 3 is the SEC strikes back. Just talks about how SEC has come out against many ICOs, and they've handed out subpoenas to over 80 of them. That was an article that I covered earlier this year. So it says here the SEC entered the playground with some notable bulletins accusing some of the ICOs as fraud schemes. In August of last year, the SEC contacted a company called Protostar, who were conducting an ICO, and shortly after, Protostar canceled its ICO and refunded the money it had raised so far. The next month, the SEC exposed 2 more ICOs for defrauding investors. This was only the beginning. Now it looks like the SEC is gearing up to crack down on ICOs in a serious way. Last December, SEC Chairman Jay Clayton wrote a public letter stating that all token offerings are securities, and on February 6th, he testified before Congress again, confirming that most ICOs constitute the sale of securities. This means that all ICOs must be regulated and registered with the SEC. And so it talks about last month, Aris Bank's ICO was shut down by the SEC, who claimed the company is an outright scam. So here we go, people, you know. And it's funny because at the Bitcoin conference in Miami, the International Bitcoin Conference in Miami, you know, they had a panel that discussed this very issue about ICOs. This was in January, and people were like, yeah, the consensus on the panel was that these ICO token raises are really securities. They're securities, but they're not. Like, it's really shafting. Honestly, if you want to think about it, if you want to break it down, and shout out to my man Don from West V. We had a great talk about this over the weekend, off the chain episode number 6. So check that out if you haven't. But we talked about, I was talking to someone else about this, like, you know, it's the best of both worlds for the person issuing the ICOs in many cases, because they're giving you a token that doesn't really represent any equity. You don't have any voting rights. You don't have anything but a speculative asset that pseudo represents that particular project, unless that token is a dividend token. So then that's a different case. That's a different scenario. But other than that, you're giving them your ETH in return for getting a token. Yeah, you know, you can say it has some utility function, but at the end of the day, there's nothing that really you have a say-so on in regards to that particular project. So what they're saying, I'm just going to skim down. I'll leave the link to this article in the description of this video, but it goes on to talk about, and this is what I was actually considering doing for one of my startups, one of these options, and I will get to that. But here it says here, enter ICO 2.0, and the party goes on. The ICO is clearly one of the great innovations to come out of the blockchain industry. It offers freedom to those who innovate from harsh treatment by venture capitalists. This is clearly an alternative important to those who are shut out from receiving expensive VC capital with more strings attached than one can count. That's very true. The ICO 2.0 solves all of these issues and are confronted with and offers others a way forward in which investors are able to make an informed decision, and CEOs get to achieve their dreams while living in freedom. Amen. So here I'm going to just show you guys the three main types of ICOs that they're talking. Actually, four main ICOs structures that you'll start to see more of as we go forward. And so they are actually simple agreement for future tokens. That's a SAFT. That's the one I was considering doing with my partner, with our company. It is a derivative securities instrument. It is simply put in place and offer investors the ability to invest before the token is ready. Second one is a real agreement for tokens and equity, a rate. And a rate is a 2-token offering. One of them is equity in the company, and the other the delivery of another token as a perk. Number 3 is a safe. Now, a safe is, I've heard of a safe in the VC world and startup world. Safe is an equity only offering. The token can be a preferred or common equity investment. If it is preferred offering, it can offer a non-convertible security with a dividend similar to revenue share. And the last one here is a straight equity offering by issuing a token. This is simple because the company offers a new class of equity, be it common, with or without voting rights. The token can also be preferred and offer dividends. So as you can probably see from those four new, a few of them are new. I knew about most of these on the list. These are really, this is where you can start doing valuations on tokens and having a true valuation on a token, because as of now, most of these tokens really shouldn't, I'm be honest with you, probably shouldn't have much of a value other than its speculative nature. It's not tied to any voting rights. It's not tied to equity, so on and so forth, or any convertible debts or anything like that, so, or bonds. So what do you guys think about this? Do you see this being the wave of the future? Is this more equitable or fair for the token holders? You know, because I'm thinking about it, token holders are getting shafted here. If it's not a dividend token, if it's not some form of residual income from that token in some form or fashion, then in most cases I would assume that it's more beneficial for the company who issued it than the token holders. So definitely let me know your thoughts on this, people. I would love to know. Let's have a discussion about this. I'll leave a link to the full article so you can check it out. It's a very good article. Again, shout out to my man Ed and I'll holler at y'all later. Peace. Make sure you like and subscribe too. I keep forgetting to do that. I don't really care.